Good evening, everyone. Time for another silver update. You're looking at the 4-hour chart of silver, drawn a couple of formations. One is a descending flag formation. This is the larger one. Another one is less descending flag formation, and we're just looking to see resolution here. I would say it's a 50-50 bet whether we break out to the upside or break out to the downside. I'm definitely going to revise my call depending on what this flag formation does. So I give that roughly 1 to 2 days and I'll go ahead and make that call. My guess is that we're probably going to round down just because the strength in the oil market that I expected to come through is actually not following through now, starting to look like a top formation. The gold chart also has begun to turn down, so I'll make that revised call in the next 1 or 2 days. Now, I wanted to mention briefly the MF Global article that I pointed out recently. Someone has made a comment, and I just wanted to add this. The comment that was made was talking about, as you know, the losses suffered by MF Global was supposedly based on a bet they made on euro bonds. I don't know the exact bonds, but the suggestion that this one listener made was that the possible reason for the MF Global catastrophe may have to do with the fact that the Greek bonds recently were given a 50% haircut, but they were declared not to be a default. So since that was the case, that meant that when those bonds were cut in half in value, they ruled that that would not be a default or triggering event, which means that insurance written on those bonds would not be triggered. That means that the holders of those bonds would have to take the 50% haircut and couldn't trigger any CDO, CDS, whatever those contracts are. My guess is probably, if you researched it and have to look further yourself, that perhaps maybe it was JP Morgan or Goldman Sachs that was behind those insurance. At least the listener's suggestion was that it was Goldman and Morgan that were behind writing those insurance contracts. And of course, since they ruled that it was not technically a default, then Morgan and Goldman, or whoever wrote the insurance on those bonds, would not have to pony up the money, and therefore the bettor, which was MF Global, had to take the loss, and that resulted in the bankruptcy. So that's a speculation on that. I just wanted to throw that out. Now, the main topic I wanted to look at tonight is an interview with Eric Sprott. This is a very excellent interview. It's Patrick Montez de Oca from Seeking Alpha, and Sprott makes some very good points here, so we'll jump into that. Question: Mr. Sprott, can you please give us the current situation in terms of price in the silver market? What you might see in the short term as it unfolds in the next 6 to 12 months? What is your forecast? Eric Sprott: Sure, I take a longer term view than 6 to 12 months. I've been involved in silver for about probably almost 10 years now, and of course the price of silver has done wonderful things in that time period, even though recently it's come under a lot of pressure. My thesis being that even though the last decade has been the decade of gold, this decade will be the decade of silver. I can only imagine that it will go back to its historical relationship to gold of 16 to 1 in terms of price. And as an example, 16 to 1, with gold at $1,600, it would suggest that silver price should be around $100. Most of the data that I look at, certainly as it pertains to day-to-day markets, and I don't mean the COMEX, we're not talking about that, we're talking about physical market for silver. We have data points that suggest that buying for silver by the public is almost a ratio of dollars of silver being bought to dollars of gold being bought. We can see that the U.S. Mint's data that comes out every month and pretty much every day. So for example, the amount of silver coins being bought through the Mint service, they sold 50 times the number of silver to gold coins. This month it's actually running out 70 to 1. This really means people are putting as many dollars into silver as they are into gold, but there is nowhere near the amount of silver to invest in as there is gold. So let me clarify a statement real quick. We're roughly at the 50 to 1 silver to gold ratio right now, but what we're finding out is that dollar for dollar, people are putting as many dollars into silver, and now with 70 actually more dollars into silver than they are into gold. What that means is that for every ounce of gold, 50 to 70 ounces of physical silver are being purchased. Now we know that the historical ratio has been roughly 16 to 1, anywhere from 10 to 16 to 1. We know that the earth crust ratio is anywhere from 10, 12, 16 to 1, something similar to that. So as people continue to buy the same amount of physical silver as they do physical gold, that 50 to 1 ratio has to compress, or we're simply run out of silver. So back to the interview. Question: so do you attribute this correction we saw recently to the correction we saw in the beginning of April? Eric: sure. Well, I think both corrections were orchestrated by people who are massively short silver. When the price went from 20 to 50 roughly, I mean, those shorts had lost about $20 billion. If silver had broken through $50, things would have gone absolutely crazy. Like when gold went to $850, it doubled shortly thereafter, which would have created great stress on those people who were short. And unfortunately, in the COMEX market, which is mostly a paper market, those who have huge amounts of money can force the price down. And as you may have recalled, Patrick, there was a Sunday night around 9:30 p.m. when the price went down $6. Question: and it's usually over the weekend that this happens. Eric: exactly, when nobody was trading. And that particular day, the Chinese market was closed and the UK market was going to be closed that day. And of course, everyone comes into work at the New York time and the price of silver is down $6. They already have a margin call. Then the CME raised margins 4 times in the next week, which put the long holders of silver contracts under tremendous duress, so they had to sell them. So a lot of the short position has been covered here. I'm not saying there won't be further raids. There was a raid recently where they recently knocked it down to $27, and that is what happens in the paper markets. Paper markets can trade up to 1 billion ounces a day, while we only produce 900 million ounces a year. Now, I wanted to remind you of the figures that I showed you earlier on a video that I covered on the Silver Institute's report. Actually, the amount mined is not 900, it's 735 million. We get to over 1 billion, but we have to add in net government sales. We also have the scrap recycling, and then we have this strange producer hedging. So these I expect all to wither away. And so obviously this number is going to have to greatly expand. But you can see, if you look over the years, an increase from 606 to 735 over the course of 10 years is not a large percentage increase. So I would not expect that we could see a big jump in the amount of silver mined, especially with the price so low. And back to the interview. And it's usually over the weekend that this happens. Eric: exactly, when nobody was trading. And that particular day, the Chinese market was closed and the UK market was going to be closed that day. I'm sorry, I've already covered that. So we were at 900 million ounces a year. And looking at the physical markets, which I spend most of my time looking at, I can identify something like a 380 million ounce change in supply and demand just in the past 5 years in a 900 million ounce market. I believe that sooner or later we are going to run into a shortage in physical silver, and the physical silver price will then determine the COMEX price. Question: I think a lot of people would like to know potentially how soon would you see this change taking place? Eric: well, that's a very tough question to answer because there are forces at work every day, right? And you have to exhaust those forces, or they have to have some reason to change their view on what's their best interest in the paper markets. I've always imagined there, or hoped that some industrial user of silver will say, oh, I can't get the silver. And the word gets out that there's a physical shortage. Or the people just continue to buy at the rate they are buying because you just can't keep buying silver on a 1-to-1 ratio to gold and have the price be 50 to 1. That is mathematically impossible. Question: I know that you like silver very much, but let's talk about gold for a minute. And please tell me your opinion about Venezuela. Chavez repatriating the gold that they had on deposit with English banks. Is this possibly or potentially the beginning of a new trend of realizing the inventory of real gold by those countries or institutions? Eric, sure. Well, I think it's one step in the process. One other thing that has happened is we've now seen that central banks are buying gold. While they used to be sellers of physical gold, now they are buyers of physical gold. The GFMS this year suggested that central banks may buy as many as 500 tons of gold, whereas they were sellers last year. And this is in a 4,000 ton a year market. And I think Venezuela's statement is, we want to have our physical gold in our physical possession. Is it going to make a difference? I can't tell you the answer yet, because of course Venezuela doesn't have their gold yet. And I'm surprised it's taken theoretically until the middle of November for them to get their gold, because it was on deposit. You wouldn't think the logistics of transferring that amount of gold. I think it's 93 or 110 tons. That's not a lot of gold in terms of physical size because it's so dense. Now, that made me curious, so I did a little research here, and just so we can look at that and get an idea, because there have been people talking about how they do it, and they'd send the flotilla boats and all this stuff. People talking about how Venezuela would get their gold. So I wanted to look at that real quick here, and the first is just an answers.com question. How big is 1 ton of gold? And you get, I'm not going to go through all the calculations, you get, we're talking about metric ton, you got 19.32 grams per cubic meter, and then there's a million divided by etc. So the answer ends up being that 1 ton of gold is basically a cube that's 15 inches on each side. So for reasons of simplicity, and you'll see that the number is going to go higher when we get the cubic feet, but I'm just going to say we're 1 foot. So let's take that 1 foot cubic, we'll say 1 ton per cubic foot, and then what we want to do is we want to find out what size this cube would be. So if we took a cube that was 5 foot by 5 foot by 5 foot, that's 125 square feet, or cubic feet, which that would basically be this amount. So we're talking about a cube that is 5 by 5 by 5 feet. That's 125 cubic feet, or roughly 100 metric tons cubed. So let's look at that. First of all, we want to look at what that size is. I pulled out just a picture that is a cargo trailer that was out there on the internet. This is a picture of a cargo trailer that holds 125 cubic feet. So that's the size of the gold that we're talking about. Now, I also did a little bit of research on what type of cargo planes are out there, and I came up with, this is one of many, it's the Antonov AN-124. It's a Russian cargo plane, and this plane actually is the second largest cargo plane, but if you scroll down you can see when you look at the capacity that the maximum payload on the AN-124-100 is 120 tons, and the maximum payload on the 124-150 is 150 tons. So this cargo plane here could carry that amount of gold. Now, you probably wouldn't want to put that trailer size cube right in the middle of it, or maybe you would, I don't know enough about logistics, but the point is that they could put this gold on this plane and fly it overnight to Venezuela. So that's just to give you a realistic picture of how much gold that is. Physically, it's not a lot of gold at all. So back to the interview. Question: you experienced the same kind of reaction, I believe, when you recently wanted to purchase some silver, where it took a little longer than what one would think would be normal. Eric: well, when we started the silver chest, we had to go into the market and buy 15 million ounces. This was about exactly a year ago, and 15 million ounces at the time, an ounce was probably $20, was like $300 million worth of silver, which is not a lot of silver. And you would think people advertising it as 1 billion ounces of silver and you want to buy 15, you'd get pretty speedy delivery. It took us 3 months for us to get the silver, and some of that silver was delivered to us, was manufactured after we had made the purchase agreement, which really means, in my mind, there wasn't a tremendous amount of silver lying around waiting to be delivered. Question: so there could be the possibility that we may have a lot less inventory than what appears to be told on these government reports. Eric: sure, nobody really knows how much inventory there is. We know how much is in the COMEX, we know how much the PSLV owns, but theoretically that shouldn't be available beyond that. I just don't believe there's a huge amount of silver, and we are buyers of silver every day. We're very often delayed on our shipments. You know, we could go in and buy 200,000 or 300,000 ounces, and we sort of get the comment, well, you know, that shipment is going to take 2 or 3 weeks, which really means I don't think there is really any ready silver inventory that's just waiting for someone to say, okay, fine, I'm going to buy, we'll deliver it to you, because it's not really that difficult to deliver silver. Question: let's talk a little bit about the European crisis and the Eurozone crisis. So I'm going to go ahead and stop there because he goes mainly into the Euro crisis, and there's some information about silver, but I'll let you read the rest of it. I'll put the link below. So just to highlight, the first point is, if anybody knows, let me know if the MF Global situation was triggered by the 50% default on those Greek bonds, and whether or not JP Morgan and Goldman Sachs were behind their derivatives insurance based on those. I'd be very interested to know that. The size of that gold shipment is very interesting. I had not thought about it, but it's obvious that just one cargo plane could carry that. Yeah, you might want to divide it up into 4 cargo planes in case you lost one, but it doesn't take a flotilla of ships to get that gold there. So, very interesting question. Why isn't the gold there yet? And of course, the silver price, I'm waiting for silver to resolve itself, and when it does in the next couple of days, I'll go ahead and make the call as to whether I'm going to call off that $100 price by the end of the year. And we'll talk to you next time.